Good morning, guys, and welcome to the Camp Financial Stock Market Update. Today's February the 15th, so we are basically half the way through February. A little less, I guess, on the trading days. There's still a few more trading days, I think, than half. But let's take a look so far at how the three systems that I use to invest: the Quanta Funda Techna, the technical only, and the undervalued stocks are performing so far this month. And also we'll go over a couple other things. About every quarter I like to so I always put the first $10,000, or I always recommend that you put your first $10,000 into some mutual funds. I actually like to diversify those mutual funds as well. I do some large, small, international, domestic bonds, bond funds. They're all in there. So I like to keep my percentages the way I would like the whole portfolio to look, which for me that's pretty much 90% stocks, 10% bonds. So every quarter, like I said, I'll go in there, take a look at the mutual funds, and start to move some in and out. Stocks or funds that have run up, I'll take some of the money out of that, put it into cash, set it aside so that I can use it to buy more stocks that I've done the research on. So, alright, with that said, let's take a look so far this month. Let's start with the Quanta Funda Techna. So we've had a recent purchase, and actually that's in my wife's account, using this strategy. I sold out of her mutual funds, and for whatever reason this is not the portfolio is showing up strangely. I'm not sure what happened here, but so we bought ticker symbol PKBK, Park Bank Corp, for her portfolio. Oh, there we go. That's what was wrong. It went down too far. It scrolled too far. There we go. So we bought PKBK, which is Park Bank Corp. We just bought that 2 days ago. Actually, we bought it on February 13th. And we got in at basically $21.35 a share. So it's up just a little bit since then. No other action has been going on in the Quanta Funda Techna so far this month. It's up about 1.87% versus the S&P up 2.5%, about 2.58% in the S&P. The Dow up 3.22%, and the Nasdaq up 2.99%. So right now, for the month, it's lagging all the major indexes, and that's all right. You're never going to beat the index every month, so I don't panic about that. What I am going to look at real quick is how we're compared so far for the year. Let's see how we compare to the S&P. So we're up about 5.47% for the year versus the S&P up 4.41%. The Dow up 3.75%, and the Nasdaq up 7.42. So the Nasdaq obviously has performed very well, but our portfolio is beating the other two major market indexes. So let's take a look over at our undervalued investments. So that portfolio, which is very small right now still, I mean, we haven't had a chance to build it out yet. It's actually, right now, it's only got 3 stocks in it. After we sold out of Sunoco at a loss, and were forced out of SeaWorld at a gain, but that was because we had sold put option, or sold call options to kind of lock in a certain price if it made it there, and it sure enough it did. So it got dropped from 5 to just 3 stocks. The 3 stocks that are in there are still performing very well. Like I said, so far this month we're up 3.07. We've already talked about the indexes there. Let me take a look at this one for the year so far. It is up. Actually, it's up better than the Quanta Fund Techna one. It's up 6%. So Quanta Fund Techna is up 5.5% roughly. And let me get over here and see the technical. The technical was lagging, but I believe it's rallied pretty good so far in February. No, it's actually it's still behind the S&P 500 as well. And actually in January the technical system lost about 8%, or 0.8%, 0.8%. We're up almost 2% so far this month on it, though. Again, mostly being led this month by Bank of America and American Airlines coming back from. American Airlines had kind of a rough January. Bank of America hasn't. Bank of America has not looked back since November, but so that kind of runs through those. We'll probably look to add another stock in that portfolio here pretty soon. So as I mentioned about the mutual funds, we'll go over there. I had 2 mutual funds that we sold parts of on February 7th. They just, had run up and kind of got outsized for the portfolio than from where we wanted it. So we sold off portions of QRSVX and VLEOX. Kept the main investment there, to rebalance back down to the number that we wanted. There was one that we sold out of, and I deleted the ticker symbol already from my spreadsheet. I didn't even save it in there. But we bought PMBPX as a mid-cap growth mutual fund. So that's now part of the mutual fund portfolio. Now let's take a look over at some of the individual stocks that we're in right now, parts of the portfolio. So MGIC, we're in that. We're actually looking, so we got in at 690, 695 roughly. We're looking to get out of that if it would push up to 785. Right now it's at 750. So that's a possibility. All the other stocks in the Quanta Fund Techna that are a bigger portion of the portfolio, we're going to be in for a while. They're either flat or down. So that's a system where we hold until we get a 10% gain. So these stocks will stay in there until they climb to that 10% gain. All these stocks do pay a dividend, so that all is part of the number as well. Now let's look at the technical, all the stocks in there. So we've got 10 total stocks in our technical trader, our technical traded investment portion. Bank of America is by far the number one stock in there. We bought that back in September 19th of 2016. We bought it at $15.71, and last night's close was $24.06. So currently, once you take out the commission that we paid, as well as and then include back in the dividends that we've received, that stock is up 51% for us since September. ADTN, Adtran, we've been in that for a little over a year. It's up 22.7. Ormat Technologies, we've been in that for just under a year. We got into that March 30th of 2016. It's up 32.5%. American Airlines, we've been in that since October 14th. That's up 18.96%. Blue Cap Reinsurance Holdings, we've been in that for almost 2 years now. It's up 26.33%. Most of that is really from the dividend. It just consistently pays a nice healthy dividend. MetLife, we've been in since September 30th. It's up 19.76%. WVFC, it's a smaller bank. It's up 16.12% since August 25th, 2016. ConocoPhillips, we're still in. We've been in since October 4th. It's up 14.42%. Thomson Reuters, we've been in that since September of 2015. It's up 14.6%. And then our dead money stock so far in the system is GE. We've been in that since October of 2015, and it's up just 4.1%. So other stocks that we bought last year in this system, let's go and take a look at that. So we got into NAUH, it's North American University Holdings. We got in at $2.17 a share. We stopped out at $1.87 a share. We did receive a dividend in that time, so on that trade we lost 14.2%. Agnico Eagle Mines, we got in at $35.83, got out at $48.25. Once you include dividends and everything there, we made 30.36% on that, so more than made up for the North American University Holdings loss. Coach, we were in that last February 10th of 2016. We got in at $33.75. Got out at $34.96. Once you include commissions, so this when we're trading a small amount, so these are usually all started at a $400 investment. Coach was a $400 investment. Since then, I've upped the number a little bit. We're looking to invest with this system closer to $800-900, maybe even $1,000 on the next one that we buy. But so Coach, like I said, we bought at $33.75, out at $34.96. So you would think, what's that? That's it's $1.21 on $33. So that's about a 3.5% increase. But once you take out commissions and everything that we paid, we made 0.43% on that trade, so it was pretty much a flat trade for us. And then surgical care alliances, we got in at 41.96, out at 42.19, and lost 4.74% on that one. So I just kind of want to go back, run through last year's trades in the system that aren't still in the system, because right now our current trades look really good, and I don't want people to think that, oh well, every time that he makes a trade it's going to work. No, it doesn't work. There's some in there that I bought into and they turned and went straight against me, and I lost 24% on. Just under, actually I have one in here that I lost 24.91% on. For whatever reason, it was queued up to run well, and then it just went the other way, and sometimes that happens. So then we'll look at also again then at the undervalued portfolio. Again, that's only been around since April 20th of last year is when I first started doing a little more research on the undervalued stocks. In that, we've got two high flyers, Unum Group up 47.32%, Marriott Vacations Worldwide up 32.2%. Then we have EXC that is up 8.29%. Most of that's from the dividend. And then let's take a look here. So SeaWorld, we mentioned already how we got in and out of that. Sunoco was the other one that we were in, and on that one we lost about 24% once you calculate dividends and commissions and everything. So that pretty much gives us a run through the market. If you've seen recently, I did a write-up on Apple on the blog at www.getinshapehq.com. Getting ready to work on the Dow, or not the Dow, the S&P 500 articles. My goal is I want to get at least one written. I'd like to get a couple stocks written up about this month. Get me ready to write a few more for the next month. So you can always find me on Facebook, Chris Mielek, or you can follow one of my pages, Get in Shape HQ, or on Camp Financial. We're probably going to start pushing more to move to that Camp Financial page, and just change my personal, just to be more personal and not so much business and stocks related. But yeah, so that's it for today. Also, you can find me on Twitter at @cmielek. Send me an email, chrism@campfinancial.net. I like getting questions there from viewers that want to know about certain stocks, want me to dig in a little more on certain stocks. So, alright guys, that's it. Take care, and we will see you next time.